In this presentation, we will pay employees within QuickBooks Pro 2020, QuickBooks Desktop 2020. We were hoping to do this with the manual or free payroll within QuickBooks Desktop 2020. However, there are currently some problems to set up the manual payroll. Hopefully those will be worked out within the software in the future, and you can go in there and test out the manual payroll for yourself. What we will do now with the workaround is that we will, after this presentation or after this problem, we will add some payroll options, payroll which will be the paid payroll that you can look through and see how it's all put together. You can follow along with paid payroll, or you can add the manual payroll if it's available to you at that time and get some more in-depth into the payroll itself. For this problem, we don't want to add any paid features to it. We want everybody to be able to follow along without the added features to it. So we are going to imagine at this point in time that we have an external person that has the payroll or is providing the payroll, such as an ADP or Paychex. Think about the type of report that they would put together, which would be similar to the type of input that we would be putting and will put into QuickBooks at a later time. We'll put in the payroll in another problem to give you an example of the paid payroll features. And then also think about what that system is going to look like and how we would take that information, or what the reports would look like and how we might take that information and put it into the QuickBooks system. So there's a lot of different ways we could think about payroll, how we want to put the payroll together. Again, it's a bit more of an advanced topic, and you could specialize into it in and of itself. And we do have payroll courses that do go into that process. So that's how we're going to move forward with this. So here is the Get Great Guitars file. We have the Open Windows open. You can open the Open Windows by selecting the View dropdown and going to the Open Windows list. If we scroll down or look down, we have the Payroll section down below. Now within the Payroll section, you'll typically have an item here that which will say, pay employees, and it'll have an arrow going across here if you had any type of payroll, whether it be the free manual payroll or one of the paid payroll features. To set up paid payroll, you'd have to pay more. You can turn it on by going to this item to the left. Again, we want to push forward with this problem without adding any paid features. Therefore, we will add the paid features so you can demonstrate payroll in and of itself in a separate problem. What we're going to do here then, and also note that to turn on the manual payroll, the problem with it, as we've seen in a prior presentation, is typically, as the instructions say within QuickBooks help menus, if you go to the and has been the case for prior versions, so it might be that they're changing it for 2020, but according to what I've read, they're going to keep the manual version, so hopefully it's just something that's not easily foundable at this point. So you should be able to type in manual payroll, and then you should have the payroll option. Now, none of these payroll options will actually lead you to the place that will give you the hyperlink to set up the manual payroll. There is a workaround that I've seen, but it's not something that I want to recommend because it's too technical in nature. It's not something to go in there. So I'm not gonna request that to set up in this course. So we're not going to be setting up the payroll here. Instead, what we'll do is imagine we had a third-party vendor doing the payroll. Then we can think about what the data input would be in that format, and think about, well, what would we do if we had the third-party payroll? How would we get it into our system so we can record the payroll expense and the payroll taxes? To do that, we're just going to use a trusty Excel worksheet. So here's the trusty Excel worksheet. Now you'll recall we set up our two employees, which is Adam and Erica. So we're still able to do that. We're basically going to put together a register. And this is, you kind of want to get a feel for the register, because when you look at these registers, even if it's, whether it's in QuickBooks or outside of it, they're a mess. They're a lot of data. QuickBooks has payroll itself within QuickBooks or outside of it has a lot of different data. You want to get a feel for how this data can be grouped together, what it's going to look like in a lump sum type of version, and what it's going to look like in terms of when it's broken out into more detail by employee and by paycheck. So we're going to put in the information as if we're writing the information. This is what we would actually input into payroll if we were to process payroll through QuickBooks. So we'd say for Adam Hamilton, we're going to say the earnings for Adam Hamilton are, per month is going to be the 4583.33, and then the Social Security. Now this should be a straight number that will be calculated by the system if it were in QuickBooks. If you have the manual payroll, you'll have to calculate it. It's going to be a flat rate, but it has a little more complications to that, including a cap. So if you want more detail on that, again, we got a payroll course that gets into more detail on this. But usually it would be this number times the 0.062. And what we have here is not quite that number. So it's a little bit different what we're going to input. And that's going to be the 258. 258. And then Medicare is going to be, we're going to say 66. And this is going to be the amount that will be pulled out. Again, these are not necessarily in alignment with the actual rates at this current time. Just be aware that we're basically have the total pay. Then we're going to have to take out Medicare. We're going to have to take out Social Security to get to the net pay. Then there's also the income tax. Now, notice when we think about the income tax, we're not talking about our tax as the company. We're talking about Adam's income tax. This would be what they would report on basically their 1040. And this is something that you can't estimate because you need the marital status. Well, you need the tables to estimate it to basically do it. It's more complicated than a flat tax, which these basically are. So you would need the tables, the marital status, and this is the one that you really want to pay something to help you calculate generally because it could easily get kind of messed up, right? So we want to, you can pick the wrong line on it easily. So this one is one that's more complicated to calculate. We're going to say it's 720 here. And then the net pay then would be total earnings minus Social Security, Medicare, and the income tax. So the net pay would then be equal to this number minus the Social Security, minus the Medicare, minus the income tax. So this is the formula. If that formula is confusing, just note it's this number minus this number minus this number minus this number. And then we have the employer taxes. So notice these two, Social Security and Medicare, get pulled out of the employee paycheck. The employer then has to pay their taxes over and above that amount. And that's going to be equal to the same amount here. So note, it's kind of confusing to think about that because notice these can all be considered kind of payroll taxes in a sense, but they're not really what payroll taxes are in another sense, right? These are actually not really payroll taxes. They're actually the earnings of the employee. If we're thinking about ourselves as the company, these taxes are just the earnings of the employee. They're part of the total earnings of the $4,538. We just happen to be taking their money, their earnings, and having to pay it for them. So that's just, we're required to distribute their money not to them, but to who they owe for their taxes. The payroll taxes to us are the taxes we actually have to pay over and above the taxes that we pulled from them. So these two are actually the employer payroll taxes. So when you hear the term payroll taxes, payroll tax expenses are basically these. You can think of all of these as payroll taxes. We're going to have to pay those to the government. However, these are the only ones that we really have to pay over and above the actual payroll that we're paying to the employee. Erica, we're going to say makes $800, and we're going to say this is going to be $49 and $11. Again, I don't think those are going to be the actual rates, but we're just basically using an example problem. The federal income tax, we would need the tables and marital status. This is what we're really kind of paying for typically within the normal calculations, as well as paying for the added help for us typically to be making our payments on time and recording the quarterly payments, the 941s. And even if you get the 941s correct, really, if there's something a problem, and oftentimes people don't really catch it until the end of the year when you're doing the 941s, the 940, and the W-2s and W-3. And at that time, then you're going to try to fix everything for the full year. If you find something that doesn't reconcile, you might not see it until that point in time. And so, because payroll is so precise and you need it to all work out, it's usually worthwhile, even with a small amount of employees, to get some type of help, at least pay for the payroll for QuickBooks typically, or possibly get some other type of support within payroll is often a good idea. Could save some headaches. So we're going to say 110 is going to be here. Is that what I said? Yeah, 110. And then same formula here. It's going to be the earnings minus the Social Security minus the Medicare. And then the employer side is going to be the Social Security and the Medicare. So there we have that. Actually, we're saying, yeah, that's right. And then the total, we're going to sum these up. Total these out. I'm just going to sum this up. Equals the sum of these two. And this equals the sum of these two. and this equals the sum of these two. And I could just autofill this across. Let's do that. I'm going to put my cursor on it, use this little button down here to autofill. All I'm doing is adding the two numbers across. So this we can think about as our register. Now, it's a very simplified register. If you got a third-party payroll like ADP or Paychex, and you get their each payroll report or quarterly report, it's going to be a huge mess. You'll look at it and you're like, whoa, this is a lot of data, right? But in essence, you'll probably find something that basically is the register, which will break down this information. And let's say that we got a third-party person to record our data, and then we got the register that we wanted to put into QuickBooks. What would be the journal entry? What type of journal entry would this look like within QuickBooks? This will also be the same kind of idea or concept of the journal entry as we would think about if we were to record payroll, as we will do in a future problem when we do the paid payroll. And there's two types of ways we can think about it. We could say, okay, what if I need to put this into my system? Well, I could put it in the system employee by employee and put one journal entry for the employee, one journal entry for the second employee, and that's what QuickBooks will typically do when we run payroll within QuickBooks. We'll have to break out this information by employee, by paycheck, so that we can fill out the 941s and the 940. However, if we have Paychex doing that, or if we have ADP or some third party that's doing all that extra data, what do we need on our accounts then? We don't really need all that detail. We need the financial statements to be right. So I'm going to enter this basically as if it was going to be a financial one journal entry. We'll group it all together just to get the basically accounts correct. The detail of those accounts are being handled by the third-party payroll professional. And it might be the case that they can set theirs up and put it directly into QuickBooks as well. If they want to automate it, it might cost more and that kind of stuff. We won't get into that now. But how can we put this in as one entry? Well, we could just take the totals in. We could say let's just treat it all as if it's one payroll journal entry. Now, I'm going to use debits and credits for the journal entry. If you're not familiar with those, that's okay. I'm going to say it'll ups and downs too instead of debits and credits. But the debit is going to be payroll expense, as we would probably expect, right? Now we're going to break this journal entry out by the employee and then give the total as well. So we'll think about this check by check and then the total. Again, if you wanted to just enter the total into the system, that might be the quickest way you can do it. We'll think about it basically since we have only 2 employees, one journal entry for each employee. So we're going to say first we had the payroll for Adam. So that's going to be the gross pay. Gross pay, even though we had these taxes withheld and only paid Adam $3,539, the gross pay was this amount. We have to pay these amounts to the government. Then we're going to be picking up the payroll liability, and that's going to be these 3 amounts. So this plus this adds up to $1,044. I'm going to put that in the credit column. I'm going to call it a credit with a negative number, but it will be increasing the liability account. So I'm going to say negative sum. I'm going to use a negative sum of these 3 numbers. So if that's confusing, just note all I'm doing is adding up these 3 numbers and then flipping the sign to a negative, which to me represents a credit with our journal entries. Then the difference is going to be coming out of the checking account. What comes out of cash? Checking account, and that's going to be, I'm going to call it's just going to be this number minus this number. And I'm going to use a negative sum function. This is what I call the plug function formula. Negative sum of these. So that's just subtracted these 2 out. I want it to be a negative, which to me represents a credit, so that the credits now equal the debits. So the checking account is going down by $3,539. Payroll liability account is going up by $1,044, both in the credit direction, and then the expense is going up by the $4,583. And then we also have to basically pay payroll taxes over and above the actual gross pay. And that I would typically represent with another journal entry. That's what I would call payroll expense. And that's going to be equal to the sum of these 2 numbers. And the other side of that is going to be payroll liability. And that's going to be negative of that number. So note that the expense down here, that's why what I see as payroll expenses is really not these numbers, even though we're going to be paying those. You can consider those payroll taxes, but the payroll expense to the company is what we had to pay over and above the earnings of the employee. And so we could do the same thing for Erica. We can say, all right, Erica's earnings were, I'm just going to pick up the numbers, the 800. Then we took from Erica, not for us, but for the government. The government made us take negative sum of the 49, the 11, and the 110. And then the difference is what came out of the checking account, the negative sum of these. That's what came out of the checking account, so the credits equal the debits. And then for Erica, we had to pay over and above her salary or her hourly wage or whatever, I'm going to say the sum of Social Security and Medicare. And that's going to be also something that we're going to have to pay. It's increasing the liability because we haven't paid it yet. These two liabilities, of course, we're going to have to pay in the future. That we'll see these when they post to the financial statement. This may look cleaner. And then, of course, if we looked at this in total format, I could pull these from the total column, which is going to be this number, and then the negative sum. This is why we could do this with just one entry for both of them. Treat them as if they're just kind of like one employee. And there's that, and then the negative sum of these. And that, of course, is the same as if I added across, which would be the 5383, and this would be add up to the 1214, and this would add up to the 4169. And then if I did that here, this would be the sum of these two. And there we have that. I know I did that a little fast, but that's the same as saying the sum of these and the sum of these. So if we were to enter this into the system, we could enter it two basically journal entries into the system, or four journal entries, right, by employee, entering this and then this. So, and then we could say this is for Erica and this is for Adam, or we could say, hey, this is just all of payroll, and I'm just putting all of payroll in there at this point in time with the total journal entry into the QuickBooks system. Now, the other thing we want to think about when we do this is that, what's going to happen to our checking account, right? So when I enter this into the system, I have two checks. Typically, the two checks are going to come out, of course, separately, one to Adam and Erica. So I'm going to actually enter this into QuickBooks with a check. We'll write a check, and we'll write it basically in summary by Adam and then Erica. And then we'll think about how we're going to basically enter this. We can do it with a journal entry, or we can do it with a register. So let's do that. We're going to go back in here. We're in QuickBooks. We're going to write basically the payroll checks. Now, again, we're saying that the payroll checks was basically processed by ADP. We just need to put them into our QuickBooks system. So we're going to go into the write checks, and we're going to write checks, and I'm going to say that that's going to be the proper number. We're going to keep the date at, and you'll notice I made a mistake up here when I made this 740, because I'm going to double click on it. I didn't include the income taxes. So I'm going to go back and I'm going to adjust that now. So I'm going to go back in here. I'm going to double click on this, go to the end of it, and say minus the income tax. So now it's at 630. So it should be the 800 minus all of three of these. Now, all of the journal entries will populate automatically. So here's Erica's journal entry for the 800, and then the taxes, picked up the taxes, and the total should be picked up here, and then the totals here should adjust automatically given the formulas as well. So here's our new total numbers. Here's the total numbers that we will be using. We're going to be using these in order to populate our paychecks. So I'm going to minimize this back to QuickBooks. Okay, so the date is going to be actually the 30, let's make it the 31st, the end of the month. And then we're going to be paying the employee. So we're going to be paying first Adam. So let's put in Adam Hamilton. There it is. Notice he's an employee. We set him up as an employee even though we couldn't do the payroll process or set up the payroll process. Warning, if you are writing a paycheck for an employee, or recommend that you turn on payroll to calculate the paycheck correctly. Get the right withholdings for the federal, state taxes, Social Security, disability insurance, and other taxes. So we're going to say we do not want to do that because it'll take us to basically the paid version of the payroll. We're going to keep this free for the manual data input. So we're going to say then that the check, note the check amount that we're going to pay is going to be the amount that will be the net pay. So the 3539.33. So that's going to be the net pay. We're going to say that's going to be the 3539.33. And then the account that it's going to be going to, we're going to have to split and have multiple accounts here. So the main account that's going to be going to is payroll. We're going to call it payroll expense. So there it is, payroll expense, as you would expect. However, the payroll expense is not going to be for that same amount, the net check, but the entire check or the entire gross pay, 4583.33 in this case. So the entire check of 4583.33. And you could put a memo of payroll, or something like that, which would probably be good, but I'm not going to do it here. And then we're going to have a payroll liability. So a payroll liability or payroll payable. I would then go up and say, all right, do we have a payroll liability? We do. So there's the payroll liability. You could type it in there. It should populate. Payroll liability. That's the one we want. Tab. And again, we're not going to be setting up the paid payroll, so I closed out of that. And so now we're going to have the payroll liabilities, and it gives us the number we want, which is that 1,044. That's the number that we want here, and that's going to be the 1,044. So notice we had to, this is basically a journal entry. We constructed it kind of backwards, right? We wrote the check. The check was for this amount. And then we wrote in the payroll expenses and the liability. This is the journal entry then that you can see there, or it might be easier to see in this format. We wrote the check for $3,539.33. The earnings, the expense was for the $4,533. The difference between the two are these three amounts: Social Security, Medicare, income tax, which are payroll liabilities that we owe, and that adds up to the $1,044. So that's what we have here in essence, right? We got the paycheck, the net amount, then the liability, the gross amount, the difference, the liabilities, Social Security, Medicare, and federal income taxes. So that's going to be that one. We're going to do the same thing now for Erica. So we're going to say save and new. Let's say save and new. And then we'll write the next check, tab for the 31st. This is going to be for Erica. So Erica. And once again, we're not turning on the payroll. Then the amount of the check. The amount of the check for Erica is going to be the net pay, $630, or here, $630, same thing. So we're going to say, all right, this is going to be for $630, tab. And then the expense that we're going to have payroll expense, typing that in, and tab, not for the $630, however, but for the gross pay, which we could see here, $800, or up here, $800, whichever is easier to see for you. And we're going to say $800. And then the difference then is going to be going to payroll liabilities. Payroll liabilities, again, I'm canceling that. The payroll liabilities is the 170. That's the difference. That difference is, if we think about this, here's the gross pay. Here's the net pay. The difference are these three, or the 130 of Social Security, Medicare, and the federal income tax. So that's going to be those three. Going back over, I'm going to say save and close. So now we've recorded basically half of it, right? We've recorded these checks, but now we've got what we're going to owe on our side, which is going to be the payroll liabilities. For the payroll liabilities down here, now we can do this with a journal entry, because notice the checking account isn't affected, or we can think about this in terms of registers. So it might be easier to do this one by just simply having the total instead of breaking it out employee by employee, and then just simply enter it as a journal entry. So I'm going to do that. I'll try to do that with registers. So when I think about a register, we don't have to use journal entries. We can just say up and down. We already have, the expense doesn't typically have a register. We have to pick the balance sheet account, which will be payroll liabilities. The register then will look similar to the checking account register. So let's go back up top. I typically go into it by going lists, chart of accounts. So within the chart of accounts, we want to look at the payroll liability account. So here's the payroll liabilities. If we double click on that, I'm just going to simply double click. Double click on it. And then here we have our basically register. So within the register, I'm just going to select a journal entry and say that this is going to be increasing by this amount. Now note up here they have the Adam and Erica. So it might be nice to have it broken out between the two, Adam and Erica, or we can just group them together. Let's break them out between the two since we have that here. I'll say Adam. And I'm going to say, okay. And this is going to be an increase. And we're going to say it's an increase for Adam of the 324. So we're going to say that's going to be an increase to the liability of 324. And then the other side is going to go to payroll expense. So, or we could We could call it payroll tax expense, but usually QuickBooks just groups them together. I would think they would be nice to break out, and you could break them out. We may discuss that in the payroll section, but usually the default when we turn on payroll is to group payroll taxes and the payroll expense together. So we'll keep with that tradition. Payroll expense. So there we have that. And then we'll do this one more time. Do not affect payroll liabilities to adjust your payroll. Do you still wish to save? We're going to say yes. And then the next one is going to go for Erica. So Erica, we're going to say is Erica Robinson. Okay. And then this is going to be for Erica is the $60. $60. And again, that's these two. $60. So we'll say 60. And this is going to be to payroll expense is the other side. Now this register might be a little bit confusing, but note you're in the payroll register. That means you're in the liability account. The liability account then will be increasing. And then the other side is going to go to the expense, whatever you have to do, which the expense will be debited, in other words, and the liability will be credited, or the liability will go up and the expense will go up. Okay, so let's close this out and see what happens to the financial statements. We'll close this out, and let's close this out. We're going to then go to the reports up top. We're going to go to the company and financial. We're going to scroll down to the balance sheet standard. We're going to change the dates up top in the customized report, and we're going to change them to 01/01/20 to 12/31/20, and then we'll select OK. And this is going to be our balance sheet report. Let's take a look at the profit and loss as well, selecting the reports up top, company and financial profit and loss report, changing the dates once again from 01/01/20 to 12/31/20. Profit and loss report. Let's open up the last report and then take a look at them, that being the trial balance. Scrolling back down, accounting and taxes, trial balance, date range being 01/01/20 to 12/31/20. All right. So what's going to happen when we look at this? This is the journal entry. We have the payroll expenses that will be affected. Let's take a look at that. If we go to the payroll expenses, scrolling back down, that might be easiest to look at on the profit and loss report. So let's go to the profit and loss, and then we have the payroll expenses here. Double clicking on the payroll expenses, we see the detail that we broke out by employee. So notice how kind of nice it is that we broke it out, give us a little bit more detail by employee. If you have a lot of employees, it's going to be a kind of a mess, and you'll see when we do the paid payroll how QuickBooks does it. It'll give you a lot of detail, which can really kind of be overwhelming when you look at it at first. But if you double click on these, then you'll go into our checking. There's our check, closing this back out, and so we can see, and then these are related to the payroll taxes. So we have the payroll taxes, double clicking on those, we go to our register. So if I close this back out, then we have the payroll liability and the checking account. So if we go back into QuickBooks and we go into the balance sheet, we've got the checking account, which should be affected, going into the checking account. Then we see our checks down below for Erica and Adam and Erica. So those are those two checks. Closing this back out, we should have a liability down in the liability section. Here are the liabilities, payroll liabilities, double clicking on that. And we will have liabilities both related to the employee portion. These were generated when we generated, in essence, the payroll check. And then the liabilities related to the employer portion, what we have to pay over and above, which we created in the register, which in essence, if I double click on this, is a journal entry, right? Here's the journal entry. So closing this back out and closing this back out, those are going to be the format of them. And of course, we saw the payroll expense here that we recorded separately in a journal entry. This is the way I would think about it in terms of journal entries, and just be able to, when you look in the register, it could be in different kind of formats and grouped in different kind of ways as a check, but it's basically still a journal entry. So again, we'll get into more payroll, hopefully with a separate problem after this one, and get into more detail with that. Also note that if you go to the trial balance, it might be the easiest way to kind of analyze these things, because once again, payroll will affect many different accounts. So if you go into the trial balance, you'll have all those accounts without all the subcategories, and you can drill down on them use the auto zoom and get more familiar with it.